Hello everyone, welcome to the Trendline Investor channel. Now this week has been a very important week for me, especially from a YouTube journey perspective, and we have completed 2,500 subscribers. So big thank you to all of you who've been watching my channel till now, and thanks for all your support that you've been giving me till now. So before we start, if you haven't liked my channel, or if you haven't liked this video, or if you haven't subscribed to my channel, do subscribe. I'm sure you're going to love this channel. I'm going to help you a lot in this investing and trading journey. So in this video, the focus is going to be on two stocks. So one stock is from the automobile space, one stock is from the microfinancing space. So one is a breakout stock, and the other stock is actually going to just start a very big long-term uptrend. So let's look at these two stocks today, and just in the video somewhere I'm going to talk also about two swing stocks. So stay till the end of the video and you're going to love it. Okay, so let's look at the first. As always, I'm going to talk about Nifty outlook, and I'm going to show you what is Nifty doing. Now, last week we spoke about 17,700 on Nifty, and we did hit 17,700. Now, a lot of people are bearish, but if you were with me, you would know that I clearly gave a target of 17,700, which is the upper end of the channel. Now, we did hit 17,700 on Thursday, and Friday we had a green candle. Now on Thursday, a lot of people were saying probably it's a top. It's we're going to probably come down again and all that. Now you can do a lot of predictions, or you can just follow the trend. Now, if you're just following the trend, then that makes life much simpler. But as per my view today, what I'm going to say is, we are still looking very bullish. Now, in this entire move, from 15,000 to 17,700 levels, we have seen strong green candles all the way up, and there's been strong FII buying as well. So we did achieve 17,700, but we are close to a major trendline resistance. So it makes sense to be cautious, but the trend is still up. So we're going to tag along this trend. We're going to see how much this trend can hit higher, and if we break out on Monday, probably we have a gap up or whatever it is, then it's going to be a breakout of this downward trending channel, which is a excellent breakout, and FII's buying is keeping this market going up. So we might head higher towards levels of 18,100, 18,150. So that is this zone over there. That's the 18,100, 150 levels. So for me, that's the next major resistance that I see, which is somewhere around that zone to that zone. Right, and the major support for me is around the 17,100, which is this zone over here. You see multiple candles over here, so that's the major support zone for me. And if we go below that, then probably going to head towards levels of 16,600 levels, and until the 17,100 levels are not taken out, I do not see this trend, market trend, to go really bad or really go down from here. Okay, so that's my Nifty outlook. To let me know your thoughts on what your thoughts on Nifty. How are you predicting Nifty in the coming days? So the first stock that I'm going to look at today is LG Balakrishnan and Brothers Limited. A lot of people have been talking about the stock, especially given the results that the company has been posting of late. So that's the first stock I'm going to look at today, and it's from the automobile space. Now, if you've been with me for quite some time, you'll notice that I've changed the format of my presentation. I'm using a PPT rather than just going, with trading view. Do let me know if you like this, in this video, and I'm open to improving, and making changes to my presentation style. Right, so LG Balakrishnan, let's look at the fundamentals. The company is into manufacturing of chains, tensioners, belts. It's more in the two-wheeler space. And if you look here, it does transmission. 77% of the revenue comes from the transmission components, and then geography-wise, 82% of the revenue comes from India, 18% comes from exports. Now, as I said, two-wheelers is the majority component. So whatever they're building is mostly for the two-wheelers segment, and it has a 75% market share in the automotive chains, right, in the two-wheeler industry. It does have some marquee clients like Bajaj Auto, TVS Motors, Yamaha, Royal Enfield, and Honda. So for me, this company looks like it can do very well going forward, given the clients and given the demand that we are seeing in the automobile space of late. I think this company can do well. So it is a small company, so probably belongs to the small cap space, 2,200 crore market cap. The stock P is around 9 compared to the ROC it is generating. So ROC is around 29 and ROE also is around 22. So compared to these two, I think the stock P it's valued pretty low. At least I expect it to trade around 20 PE. So which means the stock has a lot of room ahead going forward. So sales growth and profit growth are excellent. So if you see, it has grown 23%, it has grown its profit by 52%. So for me overall, the fundamentals definitely look very good. But here's what I want to focus on today: the quarter results and the yearly results. Because both of these, if you look at the trend since 2019, so it has been kind of around 300, 400 crore mark. But since the last few quarters, it has crossed that 500 crore mark. In fact, 570 and it has been very strong, reporting very strong numbers in the quarterly numbers. Also, the operating margin here, if you look at the operating margin is also trending around the 20% mark. It has 18%, 20%, 19%, and 16%. So its kind of profile has completely changed, and it's looking pretty good in terms of the quarterly numbers as well. And net profit also, if you see, it's hit a new all-time high around 70 crore, consistently around 80 crore mark, and EPS also hit a long-time high. Looking at the annual numbers as well, if you look at the annual numbers, also we are seeing some all-time high numbers around the 2,000 crore mark. So it was doing around 1,100 crores, 1,400 crores 3 years back, and it's now doing a 2,000 crore sales year on year. Or look at those operating margins, right? It has now hit 16-19% operating margin. So operational efficiency has definitely improved multifold, because of which the PAT has almost reaching 400 crores, right? And net profit, if you see, it's around 245, 275. So if you look at the overall CAGR in terms of sales and PAT growth, we are growing at a pretty strong number. Last 3 years, the PAT has grown at 36% CAGR, and the sales has grown at 8% CAGR. Now that's tremendous. That's quality for me. And this company also is in a long-term uptrend. We'll come to that shortly. So for me, sales, PAT, and OPM all are pretty good, and all are going up, and that's fantastic for me from a fundamental perspective. As always, we look at the PE ratio and the EPS. So if you look at the PE ratio here, we're kind of trending down. Now, that's because the company has been posting very strong EPS, right? Earnings have been very strong. If you see that strong uptrend there, whereas the share price has not done really. It has come up from the COVID levels, but it has not done justice to the earnings that it has been posting, right? So for me, that's undervalued sign. So for me, definitely there's something, a lot of room left in the stock to head higher. One final point I want to highlight is the amount of shares the FIIs are buying this company. They were holding literally not even 1% in the company back in 2020 December, and today they own 8% of the company, right? That's fantastic. And whereas the DIs have been reducing stake, so kind of balanced, but overall I think the FII's interest has been very strong. They've gone up from almost nothing to almost 8% in just a few quarters. That shows the last few quarters there has been a strong accumulation. The shares have been shifted from DIs to FIIs, and for me that's a very, very interesting sign from a fundamental perspective. Okay, so let's take a look at the technicals now. Technicals are always important. It helps you time markets. Even if the stock is doing very well, sometimes the price might not be going up, it might be going down, so it helps you to time markets. Now, this obviously came in my CCI weekly scanner, and that's why we're talking about the stock today, this weekend. And if you look at the CCI on the monthly charts, it has been very strong. The last time we had such strong momentum was back 2015 or even around 2018, right? Now, post that, we have not seen a major jump in the share price since 2015. But now it looks like after this strong 8-month consolidation that we've had around the 2018 highs. So that was 2018 high. We crashed all the way from 700 levels to around 100 levels. And now we had a strong 8 months consolidation around that 2018 highs. Now after this, we also retested this primary trend line support over here, kind of retested that zone. And now we're kind of breaking out this week. Volumes have been, pretty high in the month in 2021. Now again, volumes will pick up. We are still consolidating a tight range, and we're just about to break out and head to all-time highs. So once we head to all-time highs, that's when you're going to see crazy volumes coming in. Remember, FIIs have already accumulated big enough, and also the stock has reversed from the primary trend line support. Now, all this is very bullish for me from a technical perspective. And now looking at the daily chart to find our entry and our stop losses. So daily chart here, if you see, it's almost rectangle pattern here. We had this rejection back in Feb 2022. We kind of came down, we went up, we again came down, retested that level, but did not, that was probably a shakeout there. With strong volumes, we did not really go down below that, right? And we had a strong move up, a pretty tight consolidation for almost 2 to 3 weeks. And now we are again heading higher. We had a strong candle on Wednesday, dip on Thursday, and again a strong closing on Friday, right? Volumes have been very good last 3 days. So for me, this is a very strong buy at current market price. So we'll enter above 730 levels. We'll keep a stop loss of 625, which means we are risking around 105 points or 14.4% as a stop. And we're looking for target of 1250, right? So 730 to 1250 is a pretty good target from my perspective, from investing perspective or whatever it is. So I prefer you hold and ride the trend as much as possible and don't just get out at 1250. But since a lot of people ask for targets, I don't want to keep commenting. So that's why I'm mentioning targets here. And go with the maximum portfolio size of 5% if you're new to markets. Do not go beyond that. But if you're trading well in markets, then 10% is a very good position size. So for me, with this stop loss of 625, buying at 730 with a target of 1250, Now that shows me that the risk reward is around 5. So 5 times the risk. So 100 points risk. So looking at around 500 points return. Now that's the technical outlook for LG, Balakrishnan and Bros. So do let me know what you think about this stock. But before that, this week, last week I posted a trend following strategy. In fact, it's my favorite strategy, and it has got some really good number of views. So if you haven't watched this trend following strategy, the link would be there right available in this video. So you will see a pop-up, and don't forget to watch it. And I do cover in that video, I cover how to enter with small stop losses, how you can ride big trends, how do you trail stop loss, how do you ride stocks like Tata Elxsi, right? So that's very important. A lot of people have been saying, how can you ride such huge trends? Some people have posted screenshots of massive profits, but how can you ride such trends, right? It's purely because you can trail stop losses and you can pyramid, and also I've taught you how to exit a trade. So let me know your comments in the video, and we're going to get into the second stock, which is Spandana Sphoorty Financial Limited. Now, in Spandana Sphoorty Financial Limited, a lot of you might be raising, concerns. This company is not doing well. This company has not posted good results in the recent quarter, but for me, this company is probably, has made a bottom, and we are going to see why I am going to talk about this company today. Let's take a look at the fundamentals first. Now, as I said, this company is in the microfinancing space. It has been doing pretty bad, especially post-COVID. The numbers have not been great. It had a lot of stress in its balance sheet. But just look at this report, which I read from ICICI. So this report was published last week. You can just Google ICICI Securities and Spandana Sphoorty. You'll get your PDF. There's a nice research report there. But looking at the recent quarter results and looking at what the company has been doing in the last few quarters, it looks like the earnings have been affected primarily because of the write-offs. So there has been strong NPAs. Remember, this company provides loans to small people in the villages and rural areas, and they are unsecured loans. So when the economy is not doing well, obviously they're going to get into stress, and because of which they had massive write-offs. But it was predominantly the pre-COVID related stress, and they have written off most of them. The credit quality and the book performance, ICICI says that it's in a much better shape, and their collections have been decent, right? And if you look at the shareholding pattern here, promoters have increased their stake in the last quarter, and the FIIs have also increased stake. So since March 2020, they've increased the stake by almost 2% in the company, and FIIs have been loading onto the stock, right? Whereas DIIs have kind of slightly offloaded. It's not a great, but FIIs have definitely shown some strong interest in the company. So that combined with what I'm reading from ICICI, we have more data points here. It looks like this company is bottoming out, and it's probably the last quarter where they are going to post losses, right? So going forward, I'm pretty sure they're going to make money. And even here, if you see, the new management has said they are continuing, their focus is on aligning and refining the processes to pave way for their Vision 2025. So by 2025, they want to literally almost from 6,000 crores AUM, they want to increase their assets to almost 15,000 crores. Now, they're going to do that by, they have IT problems as well. So the digital technology is not, their products are not doing well. So they have focus on that as well. So they're going to build end-to-end digital process right from customer onboarding to credit monitoring and collection. So which probably will tell them, okay, how their credits are doing, whether they are having stress. They can probably, try to find it much earlier and prevent these NPAs that they've been having in the future. So to help them build a better portfolio of customers and avoid high-risk customers, right? And the management is pretty confident that they'll be back to business normalcy by the next quarter of FY 2023. And their AUM growth guidance, as I said, 6,000. They're currently at 6,000 crore mark, 15,000 crore mark. Their guidance is pretty intact. And even the guidance for FY23 is pretty intact. Right now, there are some problems, as I said. The reason why I'm saying the company has almost bottomed out in terms of bad numbers is because of these charts I'm looking at, right? So the AUM growth has been pretty weak due to the process transition as per the new guidelines. So it's kind of bottoming out for me, and we might see combining the management commentary. I think we are probably hitting a bottom here. Right, ticket size also is reduced, so average ticket size is 25,000. That's very less, but I think we are going to see that rise again in the future. Okay, so that's from a fundamental perspective. So if you do have your points, if you've read about Spandana, do let me know in the comments. But technicals is what I want to look at today. I want to focus and tell you why I think stock is bottoming out. Okay, so I'm looking at the weekly charts. So it came in my scanner of weekly CCI weekly crossing 100, and it's for me a bullish sign, and that's why it came in my scanner. This stock actually has been trending since IPO listing. It went up, but then it's been in a very strong downtrend, right? Even after the forward low. So it kind of went sideways, then it broke down, and now it's forming a very, very strong base. Now, this also is a very good channel in my opinion because of the, the perfect reversals from the middle of the channel. and also the touch points there and this touch point here, right? So for me, this is kind of a perfect channel, and that's why I'm talking about the stock today. And this stock is now forming a very strong base, right? It's kind of a rectangle setup, but we're seeing massive volumes coming in. And look at the green candles that you're seeing. You're seeing massive green candles on weekly charts with massive volumes. Now, if you combine all of this, the management commentary, looking at what the company is saying, and looking at the charts, it posted some bad results, but the stock did not really go down. Right now, that shows with bad results, the stock is not going down. That shows that the stock is probably going to do well going forward. So now, looking at the daily charts just to find where we want to enter the stock and where we want to exit. So it's forming a very strong resistance there. So that's a zoomed in chart on the daily. And if you see, we have major resistance around 470, 480. So there's a chance that the stock might reverse and go down, because of which I'm telling you to buy the stock only above 485, not buy unless the stock goes above 485, and keep a stop loss around 395. Right, so that's a 90-point stop or 18.5% stop. Now, these stocks that I'm discussing today are purely from investment perspective. So stops are going to be pretty tight. If you're a swing trader, then you want to find tight stops and try to take trades accordingly. But I'm looking for first target of 830 from here. We are right now at 470 levels. So I'm looking for 830, which is almost 3.8 times the risk that you're taking here. And if you look at 1400, which is the all-time high, it made just after listing. So that's almost 10 times the risk that we're going to look at here. Right now, obviously, you might say, how much do I have to allocate if that's the risk that I'm going to take at? If that's the risk that you're going to take, right? So the position size for me should not be more than 5%. So if you go beyond 5%, then you have to be really good. But if you can ride the trend, this is probably the beginning of a massive uptrend. And given that how credit access has been doing, I posted a video on credit access as well. It has been doing fantastically well. It gave really good returns since I posted. Now, this is also from the same space. So this company can manage to do well like credit access, and this company will do really well going forward. So that's the stock, second stock I want to discuss today. Before we drop off, or before I leave you, I want to discuss also two stocks from a swing trade perspective, right? So a lot of you have been asking for swing trades. So first swing trade that I want to discuss is credit access. It has been forming a very tight range here, and it has been going through a 4 months time correction, also a channel reversal. So for me, this stock is an excellent stock from a swing trade perspective. Let me know in the comments what would be your entry levels, what would be your stop loss, and I'll also reply in the comments. The second stock from a swing trading perspective is Monte Carlo. I've been tracking the stock since August first week, and I did post a couple of tweets. So if you haven't followed me on Twitter, do follow me on Twitter. But this also looks like a very good risk reward setup. It has reversed from a channel support on daily charts. Volumes have picked up last Friday. And do let me know what is your stop loss for the swing trade and what will be your targets in swing trade. So that's it for today. I'm going to leave you here. If you did like my video, don't forget to subscribe. I'll see you in another video. Until then, take care, stay safe and trade safe. I'll see you in another video. Bye-bye.